Rohr here with an early concise highlight on Tuesday, December 16th, 2014. It's currently 7:15 a.m. U.S. Central Time. Regular viewers know this is a bit later than usual because we wanted to take some time to really assess the impact of the weak ruble fed by weak oil prices that is impacting especially the govies and the equities. And the foreign exchange is kind of moving along in the reactive way we expected. And we mentioned this in yesterday's post about the degree to which the world is not delinked. Ultimately, especially with the strong dollar of late and weakening emerging markets previous, some sense of China slowing down, and now Russia, anyone who's in an economy affected by oil income is not going to be buying very many foreign goods out of developed economies. So, the question now is, what does all that mean to the markets? And we've stayed with December S&P 500 for now because it's very important to note where these things are on a lead contract basis. And December does expire on Thursday, and we'll be switching over to March. But for now, the electronic trading is in March. That was off 12 at 1971 just now after hitting a low of 1960. Now you're trading about $7 higher in the December contract, so we are trading maybe about 1967 at the low end, and we're back up to approximately the 1978 area. Now this is important because the kind of levels we got into yesterday with some slippage right around 1985 is very important as the old July high and the real meat of the top of the lower trading range in the upper 1900s, below which, if the market should really fail 1985 overall, not be able to recover trading across the next couple of days, then it should reasonably be in a position where it might get back down around 1900 again. Not as bad as October in the low 1800s, but 1900 could easily be the next target if it can't hold on around 1985 to somewhat below it and end up back above it late this week. Very important. And the next resistance, quite frankly, in December contract, subtract $7 for the March, starts off at 1993 today, but through the course of the day into lunchtime and later is going to be down below 1980. So it's going to be very important where this mark can stabilize and push back out above 1985 to effectively create an up break. You'll note on this aggressive downward channel, and because it didn't close out of the bottom, we left the same reference line intact because that also was met. Again, this was a line in space off this high up here. It also got right to the channel resistance yesterday morning. We had said early that it could get back up around 17 to 20 area. That's where your resistance was. Lo and behold, that's right where it stopped. And in fact, due to the failure there, 16 to 20 area is going to remain fairly important resistance, even if the market manages to recover back above 1985 later today. And that, of course, is the equivalent of the 2010 to 14 area on the March contract. And that pretty much does it for the short-term view of the S&P 500.